MG,
Yo,
one of the major issues during the pandemic, obviously, was the mortgage forbearance, and the biggest problem was that tenants didn't have to pay rent for a period of time. What's the update with that? Are we seeing the numbers have crescendoed, or are we seeing a decrease in that?
yeah. So I mean, everybody thinks the market is going to crash, and one of the reasons they think the market is going to crash is because of everybody who had to go into forbearance agreements, right? And I tried to tell people a year ago, like, look, that don't mean anything. They're going to do everything in their power to make sure that these people don't foreclose. But if you look at the datas, right? if you look at the data, as of last week, um, forbearances are down 11 straight weeks, right? That's number one. So people are exiting these forbearance plans and paying their mortgage on time, which is a great thing, right? The number of borrowers in forbearance is now 2.1 million compared to last year when it was over 4 million people. June of last year in forbearance, half of that is now out of forbearance and back to paying their mortgage. Now, if you look at how many loans are in forbearance, Fannie Mae and Freddie Mac, which is basically conventional mortgages, have about 2% of their portfolio that are in forbearances right now. Ginnie Mae, which houses FHA loans, has about a little bit under 6%, about 5.61% of their total portfolio in COVID-19 relief forbearance. And then if you even look at private money, portfolio loans, private label securities, that's right around 8% that's currently in forbearance. So when you look at these numbers, right, as a whole, and you're talking about conventional and FHA mortgages, I mean, you're talking conventionals under 2.5% of their portfolio in forbearances. Like that is nothing compared to the grand scheme of things. So for the folks out there who've been waiting for the forbearances and I'm gonna see what's gonna happen and blah 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 blah. Let me tell y'all what's going to happen. And mark my words, clip this shit, Rashad, and I'm telling you what's going to happen. Those folks who want forbearance, a great percentage of them did not need to go in no damn forbearance. They manipulated the damn system as they should, right? Get what you gotta get, and those people, and I'm telling you because a lot of them are big earners, and they was in the building talking to me at the ATL Private EYL University event saying, yo, Matt, I saved up 100 bands. I saved up 50K. I saved up 75K. I'm now getting out of forbearance. I have enough money to buy 2 investment properties now. What should I do?
Hmm.
People know what's going to happen. Now, all of these folks are going to come in the marketplace with all the cash that they didn't spend on mortgage payments. They're going to throw all that back in, all that money on the back end of their mortgage, and they're going to have all this capital now to come into the market and compete with all the first time home buyers, which is only going to do what, guys? Continue to drive the prices up. So don't think because you see all these people in forbearance and et cetera, don't think that people are struggling out here. People are out here getting money.
Mm.
Now, there's a lot of people who are not getting money. I'm not trying to overlook those folks. There's a lot of people who struggle, who needed this forbearance assistance because they lost their jobs, et cetera, et cetera. But there's a large portion that didn't really need it. They just took advantage so they could go ahead and make other plays. So I don't think there's going to be a crash because of the forbearances. Now, as far as evictions and foreclosure moratoriums, June 30th is the day. June 30th, 2021. That is the day it's supposed to expire. But I personally think the Democrats are going to kick this down the can probably a couple more months. You have certain cities and states that have their own moratoriums that supersedes what the government is saying. So if you're buying investment properties, please do your due diligence, know what the state level requirements are for foreclosures and moratoriums, because I think like New York is a moratorium until August, right? If the federal government says now you can evict and foreclose New York, you still can't do it. So you just got to be mindful of these things and do your due diligence on a state level, a county level, if you're buying investment properties when it comes to these evictions and foreclosures.
Matt, I got a question for you. So, what are the advantages of paying your mortgage off weekly opposed to monthly in terms of interest? And then, what are the signs of a bubble and what you would say, okay, things have gotten out of hand. We probably are going to have a crash.
So if you pay your mortgage bi-weekly, you're paying bi-weekly payments, you can pay off your mortgage in 22 and a half years if you pay bi-weekly. So you're saving on the long term of interest, but make sure you're financially able to afford to pay your mortgage bi-weekly. A lot of people are not able to do that. And if you're not, you can essentially do the same thing by just making one extra principal payment annually on your mortgage. Now, tax season is here. The deadline was today. A lot of you filed your taxes. A lot of you going to get nice refunds. If you want to beat the interest trap, so to speak, and pay down your principal, you can use your tax refund every single year. Just pay an extra principal payment towards your mortgage, but make sure you specify that it's two principal balance only.
Yeah.
Because if you just give the bank money, they're going to put it to what they want to put it to, and they're going to say, oh, you just paid us 3 months in advance on your mortgage payment versus paying down your principal balance. Now, as far as a bubble is concerned, this market is really tough to kind of predict a bubble, in my opinion, because there's so much unknown still. Like, we really don't know how these numbers are going to look when people actually can start getting foreclosed and evictions on. But I'm going to stick to my guns and tell you guys probably 2023 is where you're going to see some sort of correction. Maybe summer, third quarter, fourth quarter, maybe third quarter 2023.
Yeah, I'm thinking summer. Yep.
I'm thinking when it's going to start happening, maybe late third quarter, where you're going to start seeing some sort of correction that's going to happen in the marketplace. Kiana, you want to jump in on this one too?
Yeah, because see, that's where we agree to disagree on that point. And that's just because I'm doing so much research on the market. So let's be mindful. I was reading this article. So let's not even talk about resale opportunities. Let's talk about new construction opportunities. They slowed down on building right now to keep up with the demand right now. They would have to build 4 million houses. On average, the United States was building 1.1 million houses a year up until 2014, and they slowed that down to about $700,000 a year. So 700,000 homes a year. So we are down 300,000 homes per year leading up until this time. Now, and we're also experiencing what is a lumber shortage. Lumber costs are up 250% and rising. And rising. And I can give you guys an example. I have clients under contract with new construction, which for me, it was like the safe bet in this crazy market. Now you have builders in the middle of contract coming back, raising prices 30 and 40,000 in the middle of contract to make up for the lumber shortage, to make up for the cost that they're incurring. So when I look at it from just a simple standpoint of look at the demand of people, look at the supply, look at the amount that it's going to take to build these properties. They're saying basically every new construction property now, even just on average, is costing at least $40,000 more, $36,000 to be exact per property. So when people think about a correction, I want you to think of a correction to be a slowdown. As that means a little less demand, a little less 15, 20 offers to every house. But a correction to me is not the price is going to go from 800,000 to 400,000.
Right.
I just can't foresee the market making that type of correction with the cost of building costing so much. You can't tell me, that's the think about it. You can't tell me back in the day I could get a double Whopper for $1. Now it's $4. McDonald's is not going to go back and take it down to $1. No, if you could pay it then, you're going to pay it now. So when you look at inflation, I actually just put this on my page. When you look at inflation, the last time we experienced this was in the 70s, right? So in the 70s, there was an 11% growth in inflation. Most people thought it wouldn't last. So you went from being able to purchase a house for $23,000, it went up to $53,000. We're in the middle of inflation. And when the market does correct itself and when it does slow down, the price is still going to be up. I just think the demand is going to be a little less. I feel like we're going to have a little bit more inventory and it's not going to be so cutthroat where if you're asking for $500,000 for your house, I can give you $500,000 and I can walk away, as opposed to you asking for $500,000 and I got to give you $600,000 just to be competitive. That's what I see because the numbers don't substantiate it. We don't have enough inventory.
Also, I want people to look at this too, right? Kiana gave great examples. Home was listed for $650. It sold for $770, I think you said.
$770,000. I got a screenshot. I'll post it on my story after this.
Make sure y'all go to Kiana Watson's IG page and see that in the stories. But let me tell you this, right? That 770 is now the new comp. So when people are saying, hey, I don't want to overpay and home prices are ridiculous, you got to understand every home that's closing above price is being recorded at that number. The recording does not say the home appraised for X. The recording only says it's sold for X. So understand everything that's closed this year are comps for people who are going into contract in September, because appraisers are looking back 6 months. So these prices, guys, they ain't going to get no lower. So you might as well jump in right now.
Not for the next couple of years. Yeah.
Not for the next couple of years. There will be some sort of correction, like we all agree on at some point. None of us have a crystal ball, but at some
I do, for the record.
My bad. I forgot. Ian has the crystal ball because he'll tell you down to the cent. You know what I mean? And be spot on about that ish. Ian, let me borrow that one day. We need that.
I got you. If you give me the background, I got you on a crystal ball.
Bro, I already gave you my barber. What else you need from me, Ian?
The barber and the backdrop.
I think that's a fair exchange for the crystal ball.